Hey guys, and welcome back to Smart Money Minds. Today we're going to be doing a recap and review of last week's stocks that ended on February the 12th with the closing prices. And we're going to look at February 19th and see what their closing prices are today. And we're just going to do a quick review here of the S&P 500, which had 4 red days. So that dragged down a lot of stocks with it. And that's what happened to a lot of the stocks that I was looking at as well, and they were mostly dragged down. Luckily, 2 of the larger cap stocks that I was looking at had a decent earnings run, and also another one was just kind of floating there. But the other ones that I had where it was looking at support broke their support ranges and continued downwards due to market weakness. So that didn't help. But as I said, that's why you have to have a stop, and you would have stopped out of those positions way ahead of time. The first move I was looking at here was on space on this ascending triangle. You see here in this range that we had a strong support zone, and that's where I was thinking it was going to go push back up. But what happened was, due to market weakness, it broke the support zone. That's where you should have stopped out already, around 51 zone. When it hit down here, you would have been out. And it just came down and just kind of floated back up. It's great that it's not selling too much, but I just didn't like that it broke down from this area. It is still within the 0.382 of this Fibonacci retracement move, so there's still potential for it to head back up or at least float in the zone. So now we're looking at BYND, and once again, due to market weakness, it reacted very similar to what the market did. Look, the 4 red days here. We did have a holiday on Monday. This is the SP 500 futures, so this ran on the holiday as well, but looking at the rest of the days, it was just giving back. And so that's exactly what happened. The bear volume came in, it started to give back, and that's where we came to. We peaked out here near the 0.382 of the bounce move and just continued to fade. So it just didn't look good, and it gave back more than it should. This next one here was Baidu, and it was a bit of a confusing chart here actually, because it broke out over this range here. So it looked really good. It was looking to go, but earnings came in and it looked like it had a poor earnings reaction, and it broke below this channel. Okay, but what happened was the very next day, it immediately got bought back up with high bull volume. So that was a bit of a fake out on both ends, and I would say for me, I probably would have stopped out 298 already, if not a little bit lower. Let's say if I pulled the Fibonacci here, maybe, yep. But if you look here, perfect back test of the 0.32 of this bull flag, you would say. So that's another stop level that you can consider as well, because if it breaks this zone, then you're looking down at the 0.5 zone, which is no longer too healthy of a bull flag. So this came in with good bull volume and it exploded up. So this was a good winner for my week here. The fourth chart I have here is AI. So quick review here. It was a descending triangle. I was looking for it to be testing the bottom here of this apex and then pushing back up here. However, once again, due to market weakness, we had increasing bear volume. At this range, that's where you should have stopped out, maybe around the 143, 144 range, because as you see, it kept going lower, so it's unhealthy anymore, and that's the huge red flag, and that's the play that I have here. So it didn't work out, and that's okay, because that's what the market does. AI is the biggest loser of this week. If you continue to held after this zone here, it was minus 12.5%, so no good. Last one I have is PENN. So last week we were looking at this push up here, but market weakness came. But what I liked about seeing market weakness was that seeing PENN kind of stayed in this range, stayed within this ascending ascending wedge here, this area here. So it wasn't selling off too strong, even though the market itself was selling strong. So it's looking good. There's not a lot of bear volume, I would say. So there's a potential that it could continue to hover in this range, if not continue back up to all-time high, as this uptrend hasn't been broken down yet. So we'll have to see if this keeps up. But this one up a tiny percentage, just over 1%. So there you go. This week is a good reminder that we have to have stops for invalidation zones for our charts. Because if you think about it, if you played AI, we would have stopped out way long ago for a much smaller loss than 12% and a little more than 12%. We look at something like BYND, we would have stopped out around the 165 zone because it went up and it gave everything back. So we have to be considerate of what the chart is doing day to day, and if it starts going the other way, it's okay to sell off first and reevaluate before getting back into the stock. Let me know how you did this week in the market. It was quite red for 4 days straight in the S&P 500, and it was a lot harder to trade, but it was mostly due to OPEX, which is options expiry week. And we can definitely talk more about that in a future video, and how options expiry can cause the market to become very choppy and to start to sell off. But regardless, thanks for watching. Make sure you like this video, subscribe to my channel, and we'll see you guys next time.